You could have relief again. You could have another tweet coming out. But we're in for 40, 50 years of tough negotiations with the Chinese. And what markets are talking about is a trade deal or not a trade deal. And what markets have trouble with is political and geopolitical risk. And we now have political and geopolitical risk in the U.S.-Chinese relationship, the most important economic relationship in the world, of the sort that we haven't had before. So even if the markets can sigh in relief by the end of this week by a positive tweet that one can reach a deal, and you're right, the odds of that are lower than they were before Saturday, I think it could be a short-lived and very expensive sigh of relief, because I think we're for tensions with the Chinese for a long time to come, and they could be even more pronounced on the technology front, where we'll be fighting for the commanding heights of artificial intelligence, 5G, biogenetics, all of the rest.
So, Art, hearing that, do you want to avoid sectors like tech, or do you avoid, some of the big cap companies and the Dow Industrials that we talk about all the time that are trading as proxies for this deal, like Caterpillar and Boeing, and or not?
Well, the problem is we have to make an assumption that what we learned over the weekend is completely new information, and what we've heard for the last month or so has been completely wrong. And there's probably some truth somewhere in the middle of that. I think we're further down the road and getting something accomplished. Something, upset the delegation somehow last week, and we're trying to resolve that. But if we resolve that and all of a sudden you said, okay, we need to short semiconductors or we need to sell Cat and Boeing and Apple, then you're overreacting to one data point. I think I'd rather see how this week plays out. If we learn exactly what it is that is troubling in the negotiation process, and to Fred's point, we figure this is going to be a much longer game, I think it's certainly time to get out of the way.
Let me ask you this way. If what Fred's describing is a period of many years where these issues are contentious, so that anybody caught in the middle, which are those companies that we're referencing, is exposed to that, maybe that means they trade at lower multiples. Maybe it means a little bit of an earnings hit. Why not wait for the clarity that the deal is going to happen to buy these names, instead of having the exposure to the possibility that one doesn't and that things turn nastier?
Right. Well, and what you're actually talking about depends on the time frame of the investor, of course, right? So if you're putting new money to work, would you do that this week in front of what looks like it could be a steamroller? Absolutely not. And especially avoiding those China-related names. But if you're talking about Kelly Evans, who's not going to retire for 60 years and has a 70-30 portfolio.
That's optimistic, but thank you.
making a change today because of this is the wrong thing to do as well. So it just depends on your investment time horizon. Yes, I completely agree with you.